Yeah.
And all right. All right, welcome everyone and welcome Tanner from Charting Options here. This is going to be our second trader spotlight. Again, Tanner, thank you for taking time out of your day in order to go ahead and do this interview with us. Do you care to give a little introduction about yourself, a little background of how you got into the market?
Yeah, of course. Yeah. Well, thanks for having me. First of all, always love doing these. And I know we've chatted back and forth quite a bit, so excited to officially meet you. Um, so let's see. Where should I start? I have a deep-rooted educational background in statistics. I have a master's degree in statistics. Early in college, I got very involved with the market due to a lot of financial, I get, or due to friends that were studying finances. I didn't have a lot of friends in my statistical classes, so with that came with early investing, and then obviously into trading, and that has just kind of matured since early undergrad. So through undergrad and then through graduate school, it just kind of began sharpening and then more focusing on options. And then outside of what I would say college. I took a position as a statistician for the Census Bureau, playing with a lot of data, analyzing a lot of data. So a lot of my background comes from being very versed with data and using different various analytics, which really ties into trading and why I take, I think, I believe everyone does, and I guess it all just depends, but I take more of um, a statistical approach to the market outside of just trading individual tickers. And that just comes from kind of the way of how I've studied and who I am. But I think that pretty much encompasses it all. I haven't been on Twitter long. I didn't create the Twitter until I want to say charting options didn't exist before September of 2020. So it's been almost a year now. And it's been a wild ride. It's been awesome. Twitter's a very special place. And then obviously that's grown into our own community as well.
Right on, right on. And so, with that being said, and all, you yourself are more in favor of positions. Am I correct?
If we can, if we can get the market to cooperate, um, yeah, I would prefer to swing. And swing is very loose depending on who you talk to. To me, a swing can be really almost an overnight hold, especially right now, all the way up to a few weeks if possible. Uh, the latter hasn't really occurred in 2021. There's been very little follow through with a lot. I guess that really depends on where your focus has been. But yeah, ideally, I am more of a um, I like to be a little more hands off if I can, if the market allows.
Gotcha. And do you mind just running us through your play style really quick? My viewers and members, I'm a day trader. Swing
No,
trading is not
I
my
love,
strength.
I love
My win rate with that is, in the 40s, shamefully. So,
which is still great. So get out of here.
hey man, I would be honored if you gave us a little refresher on your play style.
Yeah, for sure. So I took some notes. So if I'm looking down, I'm just trying to cover as much as I can. So uh, mainly I focus on what you'll hear me say a lot, or I guess from a charting option standpoint, is following the money. And what I mean by that are a few different things. Um, Sector rotation. So we're trying to capture where, especially right now, where money is potentially going to head in the future, or where obviously it is right now. So we'll use the term swing trader, but more of a momentum trader, I would call myself. It's very important to know where um, money is sitting and where they're going to let money sit so it can expand. Um, so with that, I use two key moving averages, which you'll see a lot. It's what we refer to as an active sequence or the hashtag ACSEEK, and that is using the 8 and the 21 EMA. Use it on the daily time frame, but you can use it all the way down to the 5 minute. It's. I would be curious to hear your thoughts on it. I don't know your trading style from a day trading standpoint, or even if you focus on moving averages too much. But pop it on if you haven't. I'd be curious to hear your thoughts. Um, so essentially, what that does is I look for stocks that are above their 8 and the 21, which basically means they're trending, and they're trending positively. So they're in an uptrend if we're trading long. So by doing that, I'm capturing stocks that are shifting up, and trying to capture the momentum of the money. And then to circle back to what I initially said with following the money, between sector rotation, institutional buying, so following dark pool prints, and with that is also following options flow. So the combination of the two can really give a good indicator of where smart money thinks money may be going into, or where they know money is going to be going into. So they're making these big bets on options contracts. Maybe they're far dated, maybe they're not. But that's another way I would either take a trade based solely off of the flow if the flow is good enough. But if the flow works with the technicals on a swing, makes it all that much more worthwhile. So I think ultimately my style, for the most part, is capturing momentum, and by doing that is with those two moving averages. Now I also, because I am more swing based and I like to sit and stuff, I do look for things like great fundamental stocks that pull back to whether it's their 200 SMA or just long time levels of support. Like I'll give you an example, like Walgreens right now is sitting at quite a level of support after some serious drawback. And I love to go long like leaps or far dated contracts from there. So leaps being 9 months to a year, but sometimes we'll do four to 6 months or maybe less. So those kind of my approach to swinging would be those two ideas.
Gotcha. Now, so for a more hands-on example, all right. So let's say there's a certain ticker that you want to have an entry in, and before I go into this too deep, correct me if I'm wrong. Do you prefer to have your entries on pullbacks? Do you ever enter on a breakout?
I am a I so I am a weakness buyer. I like to buy weakness. If a stock, if we are, or I say we, but if I am buying a breakout or if I'm watching a breakout, I'm waiting for the retest for the most part. I don't prefer to buy breakouts. Now, obviously, there are things that would change that, whether it's volume or this is the size of the candle, where the resistance was, blue skies. So if it's an all-time high breakout, that's a little different. But I prefer to buy weakness and then sell a rip.
Okay. So now there's a certain stock going into the day that you want to have a position in. You're waiting for the final pullback to start your starter position. Now, run me through that before the price even reaches your target. Okay, so price is coming down to your target. How are you picking your contracts? How are you determining that price is holding? What are your criterias and indicators of your first position?
This is a great question. So depending on the kind of trade, so let's just, for example, let's use like an active sequence trade. So we'll focus on the 8 and the 21 EMAs, which from my experience with both of them, they abide to price action, whether it be from algos, market makers, very well. Um, so what I would be looking for is on a lower time frame chart, maybe we'll say the 15-minute. We'll just use that as an example. All depends. I would be looking for a pullback to that area on a daily time frame. So I know what the daily 8 EMA is. We'll use the 8 for an example. If I know what it is, I'm looking at that price level on a lower time frame chart and I'm looking for price to build there. If price doesn't build there on the lower time frame chart, so meaning what I mean by that is if we're not finding support at that area and we're not looking constructive from a candle side of things on lower time frames, I'm not going to enter. But if we start reversing off of that, that's the first indication to take a position. Now, to follow back to your initial question, how do I approach contracts at that point? That completely depends on the trade. So if a stock is trending really well and I have high conviction that it is going to go higher and that this pullback is whether it's market induced or whether it's just profit taking early in the morning or whatever it is, I may buy a shorter dated contract and maybe potentially sell it that day if we do bounce hard enough off of that level. But I always love, when I say love, but I always prefer to give contracts time, just to avoid, because just to just obviously theta and time decay is a huge concern. So if we can minimize our risk as much as possible on the options contract ends, it will both save us in our accounts and mentally. So I always prefer to give us more time when we're swinging, but it all depends on the trade. I hope that answered everything.
Yeah. Now, a little bit more technical and deeper into that.
Yeah.
So let's say you set a certain stop loss, because this seems to be my weakness personally in swing trades. I'm setting a stop loss, and price is testing a stop loss for maybe 2 days on the daily. Price is holding, then I have a small bounce. 2 days after that bounce subsides, and I'm testing the stop loss again before finally breaking it. Now, besides fundamentals, what are other things that you're looking on the daily chart to give you conviction that your trade will end up reversing? Because as swing trades is perfectly normal to see, minus 30%, minus 40% before finally cashing out. What's your conviction that you're going to continue holding even though your stop loss is being tested, maybe 1 to 2 days throughout the week?
So before I answer that, I want to emphasize what you just said, because it's so important. And I think a lot of people that enter swing positions don't quite realize is we're not going to catch the bottom every time. And if you don't have a strong stomach, I'll say, or a tolerance for seeing premium swing, like you just said, 30, 40% down, those positions can easily become profitable. Sometimes they're your most profitable position. So if you can't stomach that, you may want to rethink if swinging is necessarily for you. But to answer your question, ultimately, there's a few things that go into it. I guess I'm always big on looking left in the chart. So we'll look left to see how stout that support is, that our stop loss, like how long has it been an area of support or an area, a level of interest? Has it shown that market makers will fake out at that level? Will in the past have we seen a candle close below and then the next day rip higher? So I guess the history of the stock is important, and kind of learning the idea of just the characteristics of how the price action works for an individual stock. The personalities are a real thing. I know, just to use a quick example, I entered a trade last week for CLF, which is a notorious choppy stock. It's a materials stock, and it stopped me out. And the next day it ripped higher, and then I think Friday it had like a 7% day on top of the rip higher. So it had I thought or digested a little bit more of the history of the stock and kind of the personality of it, I might not have A, been so quick to stop myself out, or B, I might have extended that stop more. So I think, I know I'm getting off on a tangent, so I'll focus back to your question, which is how do I build conviction in something that is continuously testing our stop? I would say going into the trade, I would have maybe a set time frame of when I want to see it move off that stop. So if we're going to sit there and lag on it for 3 or 4 sessions, I may pull the trade off if I wanted to see it move quicker than that. Again, that goes back to how far dated do we purchase our contracts? If we purchase 2 or 3 week contracts, sitting there for 3 4 days sideways is not ideal. If we purchase 2 to 3 months, that's a little different. We can afford to do that. And it just speaks to why it's so important to give yourself time, especially if you're buying at a stop loss. Um, to an extent, obviously. So, and then I would say volume is huge. So whether it be volume profile or just like daily volume, if we can see patterns of accumulation on a chart, I'm more willing to let that stop be tested a bunch, because I think that there are others that are very interested in acquiring shares at that level. So if I have kind of the conviction from that standpoint, like we'll use a fresh example where Snowflake. I had serious conviction that Snowflake was under accumulation the last month and a half, 2 months. Snowflake stopped me out last week. And sure enough, end of this week, mid to end of this week, it showed great strength, especially on Thursday with our gap down, and Friday it broke out. So it's a fine line. Sometimes the trades are going to get away from you, like that right there. I missed a huge trade and took a loss on Snowflake, and missed huge a huge trade because I never put the trade back on. Because after I was stopped out, so it's hard to answer. It's case by case basis, but ultimately it just comes down to the feel of the history of the chart.
Okay,
I
awesome.
hope that helps.
Yeah, no, that answers everything. Thank you. So
Yeah.
thanks for giving us a little dive into your training style. Um, Moving
Yeah.
on to the next section about market psychology, I want to go ahead and build off of something that you just mentioned. You said if you don't have the stomach to go through a 30-40% stop loss, that's going to be one of your driving factors to be stopped out prematurely. Now, there's a lot of new traders in the market. Not a lot of traders. For example, you and I, we might have a bigger portfolio, and that position, we can afford to make it 1% of our portfolio. However, newer traders coming into the market, they only have, let's say, a grand to 10 grand, we'll give an arbitrary number, that they can invest in. So sometimes positions such as, even weeklies on large caps will be way more than 1 to 2% of their account, thus resulting in the whole can't stomach the downturn part. So, do you have any tips for those traders of how to better withstand the storm?
So we're gonna. So assuming we're skipping past maybe a discussion prior to that by saying, which would be, should they be in that position? Is what you're saying? Okay. Um, it's tough. I mean, having a smaller account and putting maybe potentially 20-30%. I mean, I know the struggle. I understand the question, and I understand the turmoil, so to speak, of sitting in a position like that. And that's why it's so often that you you don't want to see your account go down so much, because you probably, if you only have $1,000 to $5,000 to trade, you can't lose it. So I think I'm struggling to answer in the way that, because my answer would be you shouldn't be in the position. So I'm kind of struggling to provide you with maybe more of like a constructive way to say, um, to stomach out, or to deal with the swings in the premium. I think my biggest thing, or my biggest takeaway would be, if the underlying isn't changing. And what I mean by changing is, if the structure of the setup is still there, but your premium is seeing drawback, I wouldn't be so much concerned. So I think my biggest advice to your exact question would be to focus more on the underlying stock and less on the swing of the premium. But ultimately, if we take a step back, I would say you probably shouldn't be in that position.
100%, 100%. So let's take it back so you can give more easier answers. For you specifically, from starting out to where you are now, what are some of the most valuable emotional and psychological things you have learned that have helped you grow your portfolio? From, you can include all the way going down to your lowest, where, as we both know, failure is the greatest teacher, and that's where we learn our most valuable lessons in the market. You can start all the way from down there until the point that you realize, okay, now I have to utilize all these things I've learned, and I have to stay consistent going up.
So I have a few notes on this. This is an awesome question. So I'm glad we're gonna touch on it a little bit. So I hope to provide maybe um, some insight, some help, some way to help the learning curve for others. Let me see. I have a few things. I want to see how I can constructively say this so I'm not jumping around. I'll just start broadly. And broadly, I have next to this is my biggest. So this is probably the most important. And this isn't just trading advice, this is life advice. You need to know who you are, which is that sounds very simple for me to say, but you truly need to have a great grasp or at least a solid grasp of your risk tolerance, your premium swing tolerance, or what have you. How you will react in certain situations from an emotional standpoint. Your activity level with trading. I see too often people take short dated contract trades, but they don't have the time to look at to look at lower time frame charts throughout the day, and that just doesn't make sense to me. So know your activity level. Know what you can and can do throughout the day while you're in a trade, because you ultimately, which is before I get to that part, maybe I have nope. Ultimately, you have to set yourself up for success. So if you don't set yourself up for success, you're setting yourself up for failure. So the biggest thing I would say is, and this is a forever journey, and this is a journey I'm still on. I know you're still on. Will forever be on. But I would say broadly, the biggest, most important thing is to know who you are, both as a person and as a trader. So everything from your emotions to what trading style fits you the best, to what you're able to actually visually monitor throughout the day. All of that is so very important. So, with that, I would say having a routine and a process has really helped me. Uh, and that can be anything. I know as an athlete, um, though I didn't play too high of levels, but as an athlete, we have what a lot of people refer to as superstitions, and they're not. It's a routine. It's a process. It's a what I want to say is a mental calming state, or just something that you can cling to, that your mind has accepted and is part of just your routine. So if you choose to do that every day and you find yourself um, comfortable in that, I think that can go a long way. So, and I think that starts in the morning. So for me, I get up early in the morning, very early for a lot of people, 4:35, and one of the first things I do is meditate. So I wanted to segue into all of this is, I guess, can be attributed to mindfulness, but one way that I attempt to obtain as much mindfulness as I can, at least initially in the morning, is through meditation, and then late. So we actually do that as a group. So I'll meditate myself early in the morning, maybe almost initially to waking up, and then as a group of charting options, we try to meditate 30 minutes before the bell, and then personally, I'll meditate at least one or two more times throughout the day if I can. I don't know. I don't want to infer. It's not fair to assume, but I catch you for someone that meditates as well. Um,
You'd be wrong, unfortunately.
interesting. Well, I challenge you to change that. I think it would help you a lot. Just not obviously not even in trading, but the ripple effects through life has been very impactful for me. So I'm at the point now where I can't not do it every day. And I find myself just constantly trying to do it. So, like, if I'm sitting, say, in a doctor's office, why not? Well, I got nothing else to do. So, why not just try and sit there for a few, even if it's a few minutes, to just be calm and yeah, and just sit back and just try and zone out. So, I think I'm getting off on a tangent here, but ultimately, all this comes down to mindfulness. So both from a process routine standpoint, knowing who you are, knowing your emotions, not getting too high, not getting too low. Um, and yeah, I mean, let me see, what else do I have? Yeah, and then just being disciplined, which also is attributed to mindfulness and having a routine and having a process and sticking through all of that. So I think ultimately, to answer your question, my biggest mistake that I've learned from is just not knowing Tanner first And when money is involved, if you don't know who you are, you're going to blow up a few accounts. And maybe that's part, I mean, that's part of most people's journey. It was certainly part of mine. And like you said, failure is the best teacher. But through that, I think is when you really start finding yourself. And ultimately, that would be my biggest suggestion.
Okay, okay, right on. So definitely we'll try out that meditation. I do like what you said about having a routine. You know, while it might not be a meditation, I find myself doing the same things prior to the market, just set myself up mentally. Now, a little bit more of a specific example. Going back to snow, I want to tie this back to a psychological question. Now, you got stopped out of snow on Thursday. Now, going into Friday, you see snow is breaking out. What stopped you, or I'm assuming you didn't re enter the trade? And again, before I ask this question, I personally, will get stopped out, see a breakout happening, and have this mental roadblock that prevents me from re entering. What stopped you from re entering? Was it psychological by any chance?
So just to adjust that, I got stopped out of snow the week prior. So I was
Gotcha.
sitting in a swing the week prior, and was stopped out. And I'll answer this two ways. Initially, me being stopped out was not so much a level that was broken, but I was stopped out because I didn't give the trade enough time. So I immediately set myself up for failure. So because I didn't give the trade enough time, I was quicker to pull the gun on getting out. And in doing that, obviously my mental shift, and I have a problem with this, and it's something that I try and adjust weekly, daily. When I do get stopped out of a position, it almost becomes out of sight, out of mind,
Hmm.
which is poor. It's not a good thing. And that's pretty much what happened with Snowflake, where I got stopped out. I had really high conviction at the time. And then you take on another trade, and then maybe I take on a different trade. And then all of a sudden, snow becomes really far, or not really far, but it comes further down on my purview, and then you miss it.
Gotcha.
So I would say twofold. I didn't set myself up for success initially, and that's why I was very quick to be, or I was quicker to stop myself out. And then two, I to my own fault, had a bias. In a way at that point, I don't want to say a bias in that I thought it was going to fall, but a
Hmm.
bias in that I was just basically like, oh, that trade's done,
Hmm.
but it wasn't done.
Hmm.
And that happens a lot where you'll get stopped out, especially on a swing. I don't. Maybe it's the same with you as well on lower time frames,
Hmm.
where you can quickly put the trade back on. And I say it's something that I repeat to myself often, and I say often is when that's why we abide to stops, because you can always put the trade back on. Sometimes I forget that, and that's basically what happened with Snow.
Gotcha. Gotcha. Okay. Well, thank you. I think I hammered the psychological aspect quite a bit.
Definitely.
Now, if you care to give us or are comfortable to give us, I know you obviously run a service. And again, congratulations. I've been seeing your member base explode day by day, rightfully so. You're a great swing trader. Do you care to give us any either short term or long term outlook on the market? The the important indexes, SPY, the Qs, IWM, or just the market as a whole.
Yeah, of course. Can you do me a favor? Can you define short term and define long term? Or do you
Okay,
want me to do that?
short term, we're just looking at the next 1 to 3 months. Long term, I'm talking about the next,
Years.
2 to 3 years.
Okay, fair enough. That's basically what I was thinking. I just wanted to make sure those can be loose, depending on who you're talking to. Short term, I think there's nothing more bull. So I'll preface what I'm about to say by saying there's nothing more bullish than being at all-time highs. Um, there's just not. You'll hear a lot of talk as we get extended, how a crash is coming and X and X, but from a market standpoint, or I guess I'll use an example of just an individual stock standpoint. When you're looking at an individual stock that has now broken to levels that it has never seen before, you're mentally we're thinking, oh my goodness. this is very bullish for this stock. Well, the same applies for the market as a whole. Now, whether that's being inflated by the Fed, we can get into an economic conversation. But um, right now, it's hard to not be bullish. Do I think we are short term extended? Without a doubt. Um, I definitely do. To the point where I am a bit more risk off right now because of just the nature of the of where we are, and that's specifically referring to the Nasdaq and the S&P, both of which are quite a bit above certain things that I look at. Both are above 70 RSI, which is kind of a signal bell for indexes. They don't often stay above. Um, Both are well extended from lower moving averages, which is a signal as well. But all that to say, Thursday was about as bullish as it gets. Thursday was the optimal. Thursday was very interesting, and I don't know how you approached it as a day trader because it must have really. I'm curious to pick your brain about that later. Um, but as a swing trader, Thursday was the quintessential day for a correction to begin. We had this huge gap down, and if people are truly fearful, or if they were thinking that we were going to correct from that point, we would have seen selling happen. So we would have seen that gap down become a gap and go down. That didn't happen. That gap was bought, and it bought in a big way, and then it was followed through Friday. So it's hard to not be bullish, but ultimately shorter term, and I'm talking the next, we'll just say the rest of July, I think we could see some pullback. This week, we're going to see CPI data. So we're going to see inflation data from the Fed, or well, I guess that comes from the Bureau of Labor Statistics. So we'll see how that impacts the market. Obviously, it's OPEX week, so it's operations expiration week. So there's going to be shenanigans that comes with that. So I'm not super long coming into the week. I probably don't plan on being super long coming into the week. And I'm actually looking for some topping candles on some stuff that's been extended so I can potentially go short. Uh, or I'll just maybe trade less. So that's kind of my short term 1 month outlook. 3 month outlook, September is notoriously tough to trade. I would be, if you're a swing trader and you try and swing long, I would be very, very, uh, very decisive in September, and maybe even if you're looking for a time to take a vacation, that's a good time. But I do think ultimately we do push higher, even within this year. So 2021. I mean, you'll never see me predict any sort of predictions on where price is going to go. I'll never do that. But it's hard to not be bullish on a lot of things. I mean, the Nasdaq just came out on a weekly time frame, a huge base for an index. We're talking like maybe not quite 6 months, but 4 to 5 months of basing below a key level that we've now broken above. So that will have its fruits for maybe a while. How long it goes, I don't know. It will pull back. Whether or not we retest that level, I don't know. But then I do imagine us pushing higher at some point. Now, the Fed's stance on inflation and tapering may impact or may be the spark that starts some sort of correction. But I don't think it I don't think it will, on a broader level, impact the market too much, but we will see. So I guess to segue into 2 or 3 years, we're fresh into a bull market. There's more people in the market than has ever been in the market. The reach is absolutely incredible. So there's a lot of people talking about the overextension due to the money that's being pumped in, which is totally a legitimate argument. But I think I think some of those people that have that view forget just how many new traders there are, and how much new money there is, and how the internet has just grown, and how, and I'm sure you see this too, but like I just see it anecdotally from charting options. We have people from, I think, like 20 to 30 different countries in the community, and it just speaks to just what the access to everything has done from a market standpoint. So I think that's often overlooked in terms of when people think we came out of COVID and just obviously went parabolic, which we did. But I'm not looking for over the next 2 to 3 years for any sort of crash. Obviously, unless there is some sort of cataclysmic event, whether that's a financial event or a worldly event or some sort of disaster to occur, which is how most bear markets start, or serious, true 30-40% corrections. If you look at the last few, uh, that's how they occur. So unless something like that happens, my long-term outlook right now is definitely bullish.
Awesome, awesome, man. Well, that's all I had on the menu for you. Would you want to go ahead and talk about your service? You know, get a few of the viewers to maybe try out what you have to offer.
Yeah, well, I appreciate you extending that. Yeah, so ultimately, I think the best way to kind of describe what charting options is just a community that's based around data. It is not a so much so it, I guess before I get to that point, let me just add to the data. So that's data from a market analysis standpoint. So kind of a little bit what I just talked about. We'll go more in depth on things like that and indicators and things I'm looking at. So kind of just like from a swing trader position, we want to know what the market as a whole is doing. It's very important to us. So if we don't have a good basis of that, it's hard to know if we can be in a certain position or what type of position we're going to be in. So we focus a lot on market information, um, stock trading information. So just trading in general, mindset, psychology of trading, just different tips and tricks. Um, Essentially a culmination of everyone's knowledge. So because we're on Discord now, it's become quite a community of shared knowledge and wealth, the wealth of everyone's knowledge, which is really, it's been really cool for me to see that grow. Um, but so all that to say, there are tons of ideas for trading. There are trades discussed all the time, but I think the biggest thing I want people to take away from charting options is um, the intent is for us to be just another tool in your toolkit through your journey of trading. Not to be someone to trade for you. That is not the idea behind the community. Though we certainly make it a point to try and help and provide ideas for trades. We want. I revert back to this, and I think we ultimately want you to be able to leave. I mean, I'd like to be able to provide or us as a group provide us enough knowledge to where you have the confidence to say, hey, I don't need to pay for this anymore. I can do it on my own. And then also, I'm hopeful in the sense that we've established enough camaraderie that maybe you don't want to. But that's ultimately what we're about. If you check out our website, www.chartingoptions.com, it does a lot better than what I just did of saying all the same things. Um, and then if you are interested in potentially checking us out, if you DM the private account, maybe we can set you up with some sort of trial.
Awesome, man. Awesome. And do you want to?
Thank you for letting me do that, by the way.
Of course, and I'm gonna have it in the description. Obviously, I'll put your website. I'll put your social media links, so it can be a little bit easier than just saying it out loud at the end of the video.
Totally. And I guess I'll just add that we are much more swing trading focused, um, which is very different from GA options,
Hmm.
which you are the man for day trading. So, and anyone that comes to me and says, "Hey, are you day trading focused really?" And nah, not so much, but you should check out GA options.
Hey, man, I
Um,
appreciate
oh,
that. You're
totally.
so humble.
It's mutual. No, it's mutual, man. You're awesome for real. So I really appreciate you even allowing me to talk about charting options. So thank you.
Of course, Tanner. Of course. So again, thank you for coming on here. Thank you for what you do. You know, I learn from you on a daily basis. I have you on notifications. You know, whenever you're tweeting something out, I try to find confluence with your ideas, and I challenge all the viewers to do so. You know, don't let other traders trade for you. However, find confluence among them with your own game plan. And that's what I love doing with you. So, again, thank you so much. Thank you for taking the time out. And I hope everyone enjoyed this little interview.
Thanks for having me.
Of course, man. And